welcome back to the Don and Gino Real Estate and Finance Show right here on your hometown station, AM 1220 KHTS.
And remember, our goal is always to guide you to personal and financial wellness.
Welcome back to the Don and Gino Real Estate and Finance Show right here on your hometown station, AM 1220 KHTS. And you're in the new Vault Media Studio. At least we're getting it ready. Furman and the crew at AP Pro Productions is trying to help us get set up for you. But we're excited about our move. If you didn't hear it in the first segment, Skyline is growing and we're excited about it.
We are excited about it. And what it does is it gives us the opportunity to help more of you every single day to get into homes, and we're passionate about it. And you know,
everybody on our team's passionate about it.
Yeah, and I've been reflecting on it for a while, and it's just the sooner you get in, the better, period. And we went over some of the reasons why, and the biggest reason is interest rates, and there's continued pressures. This economy is humming along pretty good, and the employment numbers look pretty good, so that's going to continue to put pressure on interest rates. The only things that are holding interest rates down is the lack of wage inflation. However, we just got our first report with some pretty solid wage inflation, so let's see if it's an anomaly or if it's a trend.
Right.
And you can find out more about that if you watch the National Real Estate Cafe. So check us out every single day by going to donandgino.com and clicking on the National Real Estate Cafe.
There you go. You can get actually updates daily sent right to your phone by texting NREC to the number 58885, NREC to 58885. And then you get a little 2 to 4 minute update on what's really happening in the markets. And that's what we want to let you know is what's really happening in the markets. You're going to hear about the markets going up and down. You've got so many naysayers. They're hoping someday they're going to be right that the real estate market's going to go down. Well, they've been way, way wrong for quite some time now.
You mean like the people watching the stock market for the last 6 months? It's going to crash, it's going to crash, it's going to crash. Yeah, if you say it's going to crash for 10 years, at some point you'll get it right.
Right. In the meantime, you just lost tens of thousands of dollars because you weren't investing. And same thing in the real estate market. In fact, we just got some more recent charts that are showing that, believe it or not, our pricing index and the housing market index is now higher, that's right, higher than it was back in the heyday in 2006, 2007.
And it's built on a solid foundation of people that qualify, have good jobs. In fact, these are the most scrutinized loans on the planet. You know, it's not easy to get a loan these days, but it's a little better than it was a few years ago. There's more options, there's more flexibility, a little more flexibility for self-employed borrowers and things of that nature as well.
Well, most of our clients are surprised. When we give them the numbers of what they qualify for, they're like, oh, I didn't even want to purchase that high, because you have a range now. Thank goodness everybody's got a different mindset. Before it was, I'll just get into a home, pretend what, state what my income is so I can buy more home than I really deserve or afford and hope it goes up in value. Now everybody's like, no, here's my budget. Everybody goes in their price range that they're comfortable at. We let you know what that comfortability is and what you can afford. You'd be surprised.
And we have people asking really good questions, right? So one of the things that came out of this last meltdown was people asking good questions. Are we originating adjustable rate mortgages? Absolutely. They're great products. So it's a good thing to do if you're the right type of borrower for them. The good news is that most of the people in our industry today are professionals, and they're not just giving ARMs to everybody. I mean, probably the percentage of ARMs that were 228s back then, remember that?
Yeah.
It was only fixed for 2 years, and there was probably, 30% of the loans were 228s.
Yeah, but at the time, fortunately, we had a lot of appreciation.
Yes.
We had 5 to 10% appreciation, so it allowed us, which took advantage of that loan, to basically within 2 years take that appreciation level and get a new loan, new refinance to get out of the second and the 2-year ARM.
Well, the interesting thing about the 2-year ARM is that it was built for subprime borrowers. It was people that had some sort of credit event or something along those lines that was saying, hey, take this temporary loan until you can get into a better loan. Right. Well, that never came for some of those borrowers, and that's where some people got in trouble.
Right. So right now, we're urging all of you to not give up, to get into the housing market. You're going to be so glad. All of you will thank us, because I guarantee you will gain some appreciation over time, and you will save because rates eventually will go up, especially if the economy continues to grow with some of the, and if there's tax cuts happen.
I was just going to say taxes. There's no better tax deduction than owning a home.
There you go. And if the tax deductions come from the corporate, basically for corporations, then that's going to help the economy, which therefore increases potential inflation, which makes interest rates increase, just so you know.
Yeah, and we have to create inflation, right? So if you look at what the government's trying to do is they're trying to create inflation, they're trying to create wage inflation because that gives you a nice solid GDP number. And that GDP number makes everybody excited. It continues to grow our country, for that matter.
Yep.
And it makes everybody feel good. So things are on the right track, which means interest rates should go higher. There are some wild cards, some international, interglobal threats of war. I mean,
But
let's
on
be
that
honest.
note, because there has been appreciation levels, we just did one on National Real Estate Cafe, or I did. Gino missed this one. But basically, you probably have more appreciation than you think. And if you did get a loan that has mortgage insurance of any kind, especially if an FHA loan, you might want to look and see if it's advantageous to remove the mortgage insurance based on your equity position. You don't need 20% equity. You can
Nope.
potentially get in for less equity position. We have ways to do it. Not all lenders know that. No other lenders do that. But you can basically eliminate the mortgage insurance. In most cases, we like to see 10% equity position and able to do that. And therefore, we also talk to you about whether a lot of you go, well, then you're resetting in 30 years. No, no. What if you took that savings and reapplied it towards your principal and actually paid off your home quicker?
23, 22, 25, those are all good years too. Nobody says it has to be 15 or 30, right?
Right.
Because 15, let's be honest, the payment on a 15-year loan is
It
pretty
is,
sticky
yeah,
in
yeah.
California. It hurts a little bit.
Yeah, it does.
It's hard to achieve, actually. So, but between 20 and 30, we find that some people can adjust their payment a little bit and knock a few years off, and there's no better way to save money. Now, I am going to bring this up again for those of you that have given up. I probably said this last year at the same time. We should look back at the old videos, but there's no better time to find a home than right now. I mean, really, from Halloween
We do say
through
this every year,
January
yeah.
1st. We say it's like a broken record every year because most people give up and they say, I'm not going to buy till next spring. Guess
I'm not
what?
going to deal with it over the holidays.
I'm not going to deal with it. I don't want to. Kids are in school. All the excuses that we hear, which means there's a buying opportunity. And for those sellers that are on the market, they might get a little uncomfortable because all summer homes have been selling within like minutes. All of a sudden their house sits for 15, 20 days. They start freaking out.
They do.
They do. And so what happens is they'll maybe take a little bit lower offer, or they won't have 7 offers to choose from, so yours looks pretty good. So I guess our point is continue to be engaged, make sure that, warning, if you just filed your tax returns and you haven't given your new tax returns to your mortgage lender, do yourself a favor, call them, because they won't remember, most of them, unfortunately. Call them and say, hey, I just filed my tax return. Does that change my qualifications? They should say absolutely. Send them your new tax return. If they don't know what you're talking about, call us.
Right.
Reach out to us at donandgino.com and we'll help you because it's something that's changing right now for those that filed extensions.
Well, and also you sellers, believe it or not, it is also a good time to sell because at least the buyers that are coming out to look at your home are serious. That's why they're coming out on holidays. They want to get in the home by the holidays for either Thanksgiving or potentially for Christmas or the New Year's. So they're highly motivated. That's the best buyer you can have.
Yeah, so we'll talk a little bit more about the real estate market on the National Real Estate Cafe. We do that every single day. Like Don said earlier, text NREC to the number 58885 to get those every single day. But right now we're looking forward to having Rob on board, and he's going to bring us, as usual. I think it's a crime if you don't talk to Rob and you have kids that are going to college.
Yeah, he's our college counseling guru with Premier College Guide. He is the man. He really has helped so many of our clients out with one of the most stressful and challenging things that any parent has to go through is how to get their kid either in the right school or the best school, and what's the best way to do that?
It's like a secret. Like nobody knows how to navigate that market. Well, Rob does, and we can't wait to have him back on. So we'll see you soon on Don and Gino Real Estate and Finance Show.